Let's look at the money and fixed income markets. Mr. John, join us now. Mr. John Kanayo. He is the head of research analyst at Imperial Asset Limited. Thank you so much for your time, Mr. John Kanayo. Take us through the take us through the activities yesterday in the fixed income market. But let's start from the money market, specifically the interbank rate, which jumped by 12 basis points to close at 14.12% at the close of yesterday. Give us the factors behind this jump.
Okay. Good morning, Frank, and thank you for having me. Like you said, money market, the rate in money market expanded yesterday. Overnight rate was called by 12 basis points to settle at 14.12%. Open repo rate was up by 70 basis points to settle at 14%. Why we have these figures up was because of the squeeze in system liquidity. System liquidity as at the end of yesterday closed at negative region of 62.13 billion compared to positive region of 136.47 billion that we had on Tuesday. What really happened with system liquidity is the fact that the bond offer that was done on Monday was settled yesterday, Wednesday. We saw 120. We saw pressure in the money market because 126.13 billion was taken away from money market to settle the bond transaction that was done on Monday. This really explained why we saw expansion in a money market rate. Like I have often pointed out here, when liquidity squeezes, what we see is expansion on rates. Why, when we have a soft liquidity, we usually see rates coming lower.
Okay. Now, talk to us in the open market operation segment of the market. We saw that, for instance, for the open market operation for 16 August 2022 probably remain flat, but for October 22 and February 2023, we saw the rate declining in that. So why do we have these, a bit of, will I say, low interest in this segment of the market?
Okay. Like I pointed out yesterday, if you look at OMO market rates in OMO market is largely low compared to if you do a simple analysis, you do a simple mathematics analysis against inflation rate. It is largely low, and what we have been seeing over time is that market participants have been disposing it, probably anticipating that the forthcoming PMA or primary market also that CDM likely push the rates up. What they do is to go short with the mindset that whenever that auction comes up, they can go long, and taking a position in a new issuance. And this is just a scenario in secondary market.
But let me quickly come in. Where do you think investors are likely to take position? In the short end or the long end?
If you look at the OMO market is divided into short, mid, and long end.
Right.
What we have seen here, like what you just pointed, is that we saw significant sell-off at the short end of the curve. Mid end, and short and mid end. Long end was largely flat. In the last 2-3 days, we've been seeing sell-off in this aspect for the market, and my own understanding of this is market is anticipating that the next option that CBN may probably push a higher spot rate to the market, and I think they are gradually waiting for that to happen, and take position that, knowing
Okay,
fully well that once this happens, it goes a long way to define what happens, what will happen in the secondary market.
Pardon me, let me quickly come in here. This primary market auction, when is it likely to happen, and how much are we expecting in terms of figure here?
Obviously, I can't give you the figure now. I think by tomorrow I should be able to give you the figure. We are expecting this to take place Wednesday next week, because there's no option in NCD this week.
Okay, it's all right. I think I will have to leave it there. But just before we go, give us your outlook. Just ahead of the primary auction, next week. So, what is the market likely to look like going forward in terms of activities, investors taking position with it across all the segments of the market?
Okay, thank you so much. If you look at the Omo market, we expect the trend that happened yesterday to repeat itself today. We are expecting that we're going to see sell-off again in that aspect of the market. At the NCD market was flat yesterday. Rates are not that, yields are not that very high, and we expect the market to remain flat. At the bond end of the market, in line with the CBN decision to increase the spot rate at the last option that was done on Monday, we expect that the market will continue to price in that increase in spot rate, like we saw yesterday, because bond market was up by was bullish, was down by 6 basis points as it settled at 11.49%. So we expect bond market to continue the bullish momentum as investors continue to pipe into this market to feed their position that we are not met at the bond auction on Monday.
It's all right. I think we have to just leave it there. Thank you so much, Mr. John Kanayo, Head Research and Strategies at Imperial Assets Limited. Thank you for your time on Business Breakfast.
Thank you, Frank, for having me. And I do have it.